Hey everyone, welcome back to our Earn to Trade evaluation series, where we use the Polarity automated trading interface to pass the Earn to Trade $200,000 evaluation. In our previous episodes, we have been using a hyper scalping strategy where it was a 4-tick take profit, 6-tick stop loss. But in this episode, we will be returning to the most basic 15-tick take profit, 15-tick stop loss strategy that we usually use. As you can see, we already automatically got filled into a short trade. What happened there was a false bottom formed, and when those triple stacked imbalances flowed in, we automatically got filled into that short trade I just talked about. And you'll see here that the strategy disarms itself every single time you enter a trade. But like you saw here, more often than not, we just turn it right back on. We have that feature enabled just so we keep ourselves out of any fake entries in case we step away from the computer or volatility picks up. It's basically a safeguard. And right there is the first winning trade of the day. And you'll see that because we had the strategy queued up with ARM on, we actually got filled into a long trade right after we got filled on that short trade here. Now I want you guys to take a look at those imbalances on this bar all across the left side of the current candle. Those are extremely aggressive sellers across all of those levels, but there is an absorption level right there, which is exactly why we were in regression mode on ARM both. If you are unfamiliar with Earn to Trade and its structuring, it's essentially a trader funding program where you initially take an evaluation. And all that evaluation consists of is you trading like you normally would. And if you're able to prove that you're consistently profitable by doing so with that fake money that they give you to trade, you're able to get that funded amount, guaranteed. I've put the current rule set on the screen here, which as you can see is quite basic. And you shouldn't find it intrusive to your normal trading style. And here is our second fill of the day. Some of you might be wondering how I'm able to pass this challenge so quickly in comparison to my $500 to $10,000 challenge, as the profit targets are quite close to each other at around $10,000. Well, firstly, this evaluation account is not real money. When you're not trading with real money, there's obviously going to be a psychological advantage. Secondly, when we started with $500, we couldn't even risk the entire $500. We actually had to only risk a certain amount of that, a low amount of that when we first started trading. On this, we can actually risk up to our entire trailing drawdown, which I believe is around $5,000. So with more than 10 times the risk tolerance, this was obviously much easier to progress. So keep that in mind if you decide to go the route of a trading evaluation when you first start your trading journey. And back to back, there's our third winning fill on the day, bringing our total profit up to $2,200. Now you'll see here we have the strategy armed and turned on, but we don't get filled into a trade for quite some time. We end up missing out on this whole upward movement here. Now, this is going to be pretty frustrating when you initially start trading the strategy that you're not capturing every large move. However, that's simply a part of the strategy. There simply wasn't a way for it to predict that that move was going to happen. If you're trying to trade every single big move, you might want to look elsewhere for a different strategy, as this isn't going to be it. And after 15 minutes of waiting, we finally get filled into a long trade. You'll notice here that all of our trades have been within the confines of a previous high or low. This is exactly what we want for optimal efficiency. It won't necessarily deteriorate our win rate when we are trading outside of these zones. However, there is a significantly higher amount of total alpha that we can capture when we're trading inside of these zones. Also, guys, make sure that when you're trading this strategy, you are not only selecting the ATM strategy in your chart trader, but actually making the change in your Polarity ATI settings. The ATM strategy that you have selected in your chart trader does not have any relevance onto what the Polarity ATI is trading. You can see over here that I am the ATM strategy 15 selected, which has 5 contracts available. However, when Polarity fills us into a trade, it selects the 15 E2T ATM strategy, which means that it's actually only using 4 contracts. So make sure that you're not making that mistake when you are trading the Polarity ATI or any automated trading system that uses an ATM strategy for that matter. Now you'll see here we've been armed for quite some time, and once again we miss out on some price action. Now this time it's a lot more choppy, so there's not really any big move that we're missing out on. However, this can be frustrating to be pushed out of a trade for a really long time when you actually want to get filled. Remember, patience is key when you are trading, regardless if you're trading an automated trading system or a manual one. What's nice about an automated system though is that we actually have a secondary layer of a safeguard. We pretty much cannot enter a trade until the system tells us to, which is great for mental stability and making sure you stick to your trading plan. Now here, after 30 minutes of not getting any trades, we finally get into a long one. Now here I actually made a pretty big mistake. This happened because of how long it was in between the last trade. I ended up losing attention and not paying attention to the screen. We had went from a low entropy environment to a high entropy one, meaning that we needed to switch from trend to regression. However, because we left it in trend, we got filled into a long trade instead of a short one here. As you can see, market's pretty choppy, leading right into this trade, leading us to lose this one. Unfortunately, this is just a fact of the matter that you're gonna make mistakes when trading, and this is exactly what happened here. This does set us back just a little bit, but we're able to get this back pretty quickly. Now, that high entropy condition was only really valid for that one trade. Now that price has made its way down to our stop loss pretty immediately, you can see that another leg is pretty obviously forming. Pay attention to the previous moves of the market where it very straightforwardly went up and down and then up and then down. So on this one, we're actually expecting it to do the same, and at least before it bounces off of the previous low on that absorption level there that we don't have marked on the screen, but it should be pretty easy for you guys to spot. Now here, after only around 2 minutes, we get filled into surprisingly a long trade. So that's part of the system when I say it's self-selective. When you have it in arm both mode, you don't actually have to do all the heavy lifting for deciding the directional aspect of it. We expected to get a short trade there, but we actually got a long one, and this is to our advantage, as this means we actually got filled on this one. They ended up forming a little bit of chop here, and then filling us pretty quickly on this trade. Now, this is really important for you guys to understand that the key to consistency with any order flow based strategy, especially the Polarity ATI, is watching Delta. Delta is extremely important for you to monitor, and doing so even with a basic understanding of Delta and how it affects price is going to significantly increase your consistency when trading it. Now that was probably kind of hard to see, but we got filled and immediately put into another long trade consecutively back to back. So what that means is that we are seeing a resurgence of aggressive buyers into this zone. Now, one thing we're going to need to be looking out for here is we are approaching this marked absorption level that we had placed earlier. You're going to see that obviously there is a high that has been placed and tested multiple times without getting through that, with a 0 in the top left-hand kind corner of those bars. This means that there is absorption at that level. There are a lot of passive sellers, both in iceberg and limit order form, which are going to continuously push price down and keeping it from breaking through, at least in theory. And that's why we switched it into regression mode. We're going to try and look for chop here. Now, remember, although it's in regression mode, that doesn't mean that we are 100% guaranteed for a short fill. That's the automated part of it. We're guiding it in the correct direction. However, the system has the final say in what direction it goes, and it's usually much better at predicting where price is going to go than, let's say, you, a regular trader. It's no offense, but personally, I will take all the help I can get when trading. Now, I say all of that, and then immediately after we get filled, we get put into a short position. So I guess that counters what I said, that I guess I really do know best. But more so, that the system understands the context of the market, and it's going to take actions that benefit you in general. Right there, like we said, we had fundamental reasons to believe that price was going to move downward after it pushed out of that area, if it pushed through it at all. And the system caught onto that, and now it's pushing us into a short trade, hoping to capture some kind of regressive action. Now for this $200,000 valuation, the profit target is $11,000. And here I'm kind of scrambling to calculate, do we have enough money to pass this if I get this trade fill? I'm looking at my net liquidation move up and down, and I'm like kind of freaking out. Is this trade going to be the one? And it does end up being the one by only $30. So we actually passed the evaluation by only $30. Now, we haven't actually technically passed it yet because we need 15 trading days, but we've already achieved the goal. So we just need to make a couple of small trades after this. Over the next 11 trading days, we need to place one trade each day. We had 3 episodes so far, and we have traded 4 days throughout those, 2 days in the first episode and 1 day each on the previous and this episode. So I guess 15 isn't that far away. And after that, of course, we are guaranteed a funding offer, which is great. And what's cool about Earn to Trade is that you are trading real capital after you're trading. It's not a quote unquote live sim like some of the other prop firm traders like Apex Trading, where you're actually on a live sim account after you pass the evaluation. That's why they're able to do it for so much cheaper. But I prefer being able to place real trades so I can see my executions and know I'm not getting spoofed in any way. Anyway, I really hope you guys enjoyed this series and you were able to learn something about how to pass evaluations with order flow. And if you guys enjoyed this kind of video, make sure you like and subscribe. I have a lot of really awesome content coming out, especially with the Analytica Chart 4. And if you saw my live stream test last week, you're gonna see some awesome live streaming content coming up very shortly. So if you're excited about that, make sure you have notifications on so you don't miss out on those streams. I hope you've all been having a wonderful week, and I'll see you guys very soon.